Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, everybody. Welcome back to another episode of Tech Talk. I am Cody. He is Andy. It is the 9th of November, about 4:10 in the Eastern Time Zone, 3:10 Central. Andy, how you doing?
You know what? I'm doing really well now that I'm talking to you. Doing great.
Trying to add a little pizzazz to the opening like Jim does on the grain feed.
Good luck with that, you know? I mean, you can only hope to, hold a candle to that.
I know. The guy kills it. Every time. I'm going to get better. I promise I'll get better.
Is that, going to be your New Year's resolution?
For sure. 100%.
Be more like Jim.
Exactly. In every single facet of the word. All of it.
Everything. Just all of it.
Yeah. But
you can sell your truck. You can buy whatever car it is. I don't even know what kind of Jim and what kind of car he drives.
We're going to find out and I'm going to do it. I don't even care.
You're going to do it. That's it. Sell the truck. Gone.
Yeah. Boom. But until then, today's episode, we have 3 charts, 2 come at request.
3. Actually, no. All 3 come at requests.
Oh,
I meant to say that in our pre-prep, whatever you want to call it, all 3 come at request. 1's anonymous. 2 aren't. Here's the first one. Lumber. This comes to us from Nighthawk. Nighthawk. Thanks, Nighthawk, for the request. What do you think of lumber here, Cody?
I mean, it's looking a little bullish. First day we settled over the 100-day moving average since mid of August here.
Shoot, what's going on here? You said the 100-day?
Yeah, it tested it the past 3 trading sessions, and today was the first day that we settled above there.
Damn. All right, so that's what you're looking at.
Yes, sir.
Okay, so I just added in the 100-day simple moving average. It's a simple one, and you are correct, sir. This is the first time in some time that this bad boy settled above that average.
Now, you tie that in with the RSI down below, not quite hitting overbought in territory just yet. There may be a little bit more room in lumber to the upside.
There sure could be, and you're not wrong, right? I mean, this bad boy still hasn't gotten into overbought, and just because it gets into that overbought territory, the sell signal, or if you're long liquidating, would be if it crossed back below it, right? So you haven't even gotten into a point where it is quote overbought. So I drew this. We had this on there. The momentum piece. Again, this stuff does trade technically too, right? And so you have this former high right here in the momentum. Forget about the price for a second, but just the momentum piece. It is back to where that is now. So if you continue to move higher, you could have a breakout in terms of the momentum relative to, in this case, the last 12 sessions. That's friendly. But I think you just look at the chart, to your point, the 100-day closed over that. You had a nice little popper right here, followed up with barely any sort of fight by the bears. And now you're back above that again. That close is over this high right here.
Yep.
Yikes. That close is over this high. So Nighthawk, I don't know what you're looking for, but this chart looking pretty good. Price looks pretty good.
Get your lumber bought now.
I don't know. You going to go out and chop some trees down, maybe sell some lumber?
At these prices, I think you're going to have to.
Did you ever plant that corn, by the way? Weren't you going to plant some corn in your backyard?
Yeah, I was going to, and then corn kind of fell apart. So we got away from that one.
Got it. Well,
some more trees. More trees.
Well, there was a a little report today. Go check out. We talked about Jim already today. Maybe go check out some of their content to learn a little bit more about today's report and the sell off that took place in the futures there. So it's a little sidebar, but go check it out. Either way, Nighthawk, might want to go buy your lumber now. I don't know what's going on here, but it looks strong like bull. This next one, it came at requests anonymously. Certainly, this has been one that's been in discussion for a while now. And I think we actually had this one on our last one.
Yes.
If not very recently. So I guess what sticks out to me about this one. So if you just look at this close right here, it looked like it wanted to get going to the upside, right? You had the space, you had a clear shot, take it back to 255, but you didn't get the open higher the next day. In fact, you got the complete, rejection of that close. So you didn't get the subsequent open higher, confirm the breakout. So that's one attempt to break out. And then this was yesterday's. That's a hammer.
Yeah.
Right. And for those that don't, a hammer is basically, it looks like a little hammer right here, right? You had a clear reversal from the intraday low to the tune of a pretty good rally off the lows. After a big break like that, that's usually indicative of a trend or something that's more or less, in this case, downtrend running out of gas. These certainly can appear anywhere, obviously, right? And if it appears at the end of an uptrend, that's usually a warning sign that the uptrend is ending. But in this case, it's usually a sign when you're trending lower that prices are done going down, or at least running out of gas. Not here. Like, good night.
So to look at this, I guess what I was checking out on this one is bringing your eyes to the RSI. As you had mentioned when we looked up lumber, the secondary indicators also can trade as if it were a chart. So if you look at the RSI from the 23rd, when we had that first major break, is where we broke below the oversold territory. Today, we have not quite gone down as far as we were on the 23rd there. So essentially like a higher low, if you will.
Yeah.
So would you look at this and say, okay, tomorrow if we keep breaking and we break down to that where we kind of petered out in the oversold territory?
Right there.
Correct.
Yeah. No, I agree. I mean, I think what you're trying to say is it's setting itself up to at least go test this value right here, right? So that's roughly 18 and some a little under 19, the value right here, right? So again, going back to our discussion about lumber and approaching the RSI and like the other side of the coin, right? Overbought. Yeah, it crossed into oversold territory here, right? I mean, let's see if we can zoom in on this bad boy here. Here we go.
It's hard to really, I guess, for myself.
It's hard to see.
Right.
So,
but looking at the RSI, if we break a little bit more and get down to 226, that's where we had a lot of support for 3 days in a row.
There we go.
Going back to June.
There we go. Okay.
Yep.
So that blue line is the oversold. So crossing below the blue line is a warning that the market's oversold. And so what's interesting about that is that yesterday's close, it brought it back above the oversold. That's a buy signal. Yep. Right? That's at least a sign that like, hey, you don't really want to be short anymore. But what's so interesting about it is that you didn't get the reason I brought up this formation right here, you didn't get the subsequent like open higher here, right? And we saw what that did to the market. Same thing occurred today, where you had the hammer, you had it crossed back over, oversold into out of oversold territory. The momentum started to approach zero, and then just right in their face. I mean, that's a wicked close. So not only did you open lower, but you just basically like trashed this entire candle right here. This one, right? You closed below yesterday's low. Yeah, I mean that just looks weak. And like if I can add a little bit of that. So this is the weekly. I mean, we looked at this prior to, and this one is like a much longer term trend, right? This goes back to March of 2020. The start here. You could break this market down, this 100 week average, right?
Yep.
We were looking at that earlier for lumber, the 100 period, but you could break this thing down into like 190, 185 and still be in an uptrend. So there's a lot of room to break still.
That's a good point.
And what's crazy about this one is that you typically, when you look at charts there's a consensus, and again, it's up for opinion, but that like the longer term charts typically trump like the shorter term ones, right? So like this one, momentum clearly crossed zero right here. So that's bearish. And then you went from overbought, clear, you went back into crossed back below. That's a sell signal, but then you cemented it over the next couple of sessions too. Right. So similar to how we look at like actual patterns that should play out, you want the next open to be in that direction. Right. So we just looked at two, for on the daily that didn't pan out. Like the next day's open was just like completely negated that previous day's candle and just didn't cement that formation. The opposite's happening here. Right. So you had the cross from zero, you had the cross from overbought and back below on the RSI here. And then you had the subsequent next session cementing those. So this weekly, it's got plenty of room to break, and it's got these secondary indicators giving them kind of like a little bit extra push.
So just for sake of argument, what if we looked at this on a monthly?
Let's do that.
I just pulled it up, and it is eerie resemblant to 2013, 2014.
Eerily. Yeah. I mean, these longer term charts are showing us that these markets, they've had a huge run, right? Record high prices,
yep.
But have more, even despite this, this is a significant break, 250 to 230. That's a big number, right? There was barely any volatility to that degree for the entire year. So, say the beginning of 2020, right? We know what happened then.
Yeah.
But like this, so this is a big sequence of moves. But again, these longer term charts, to your point, are showing us that there's more potential for weakness despite having a significant break already. I equate it back to like, when we go back to, SEP 22, I think it was. Yeah, it kind of reminds me of like when we were back in like $25 land for class 3. This is SEP 22, SEP class 3 of 2022. You had this big break from 24.85, 20, nearly $25 down to 23. That's a big move. $1.50. But, relative to what we've seen before and what we know milk can do, and like, how high $25 was relative to the rest of like last 10 years, or really ever, there was still more room to go. Right. And it's easy to say that in hindsight, right? But I guess my point is that feeders, despite having a significant break here, these longer term charts are showing us that you could break significantly more and still be trending higher.
Right.
So look out.
Yeah. That's interesting.
Look at this close. We still have tomorrow's session for this cement this weekly on feeders, but that looks nasty.
Right.
Right. It looks like the next stop is a quick trip to, what is this, 210 right in here where it really started to go. Like, I think that price becomes just a magnet, and then maybe we see some stuff like this for a little while.
We're just kind of hammer ourselves out there for a little while, trade sideways.
Yeah, see some consolidation, and then I think you go test this again. So, I don't know. It's certainly showed us that it can have big moves to the upside, but bears tend to jump out the window, so I would be a little bit careful here.
Absolutely.
Last but not least, we appreciate the requests. I don't know why I couldn't think of that word. This one came from Bilbo.
Bilbo, our good buddy Bilbo.
Our good buddy Bilbo. He didn't want to talk about D's Corn this time. He wanted to talk about S&P. What do you think here? Bilbo going to be retired anytime soon? Or
I mean, we were hopeful last time we talked about this. 2 weeks ago? I think we were on the S&P. Was that line still from when we talked about it last time?
I didn't touch anything here, except we did add from this 100 days from when you added it to lumber for Nighthawk.
Okay, so super interesting. If you haven't touched that line, I mean, look, did we touch that today?
Pretty close. I mean, it was not quite, but It was sure close.
Oof.
If you go back and I'm drawing a blank on his name, but the book that was written about him was Reminiscence of a Stock Operator. I'll get the name, but I think he back in like the 20s coined. He's like I think considered like one of the fathers of technical analysis. Coined the idea that you can have these kind of like accumulation periods, and they represent like megaphones almost.
As in a megaphone as an opening wide, coming back down to a smaller circumference of the dome.
That's right. Like a megaphone pattern is typically like an accumulation period, and that's like almost like a prelude to like an increased volatility. So like if that were to hold true, you would have like a bigger range tomorrow close higher, maybe like a candle like this or something.
Yep.
If you haven't read that book, it's a good book. But like this was one of the formations that I believe he really used, and kind of like I don't know, patent's the right word, but that was something that you would see in stocks before you'd have like a big move. So I don't know if maybe it's coincidence or not. But to your point, we bumped up right against this pretty long-term downtrend, right?
Yeah.
And now you're starting to see like a formation that is typically a prelude to like a much larger volatile move. So if we get like a candle tomorrow that basically encompasses this today's range is higher and then closes above this long-term downtrend, and then we open like Monday higher, that could get pretty wicked, like to the upside.
To a bullish move. Okay.
Yeah. Yeah. So I think you want to be a little bit careful with that.
So the megaphone move, it's the highs and the lows, not necessarily the closes that define the megaphone, right?
Yeah, you start to get like, again, you just like you think about like a traditional like channel, it just kind of bounces between the same range. But in this case, like the range of this like formation gets like bigger and bigger until you have like a pronounced move directionally. So yeah, it's certainly setting itself up for that potential, right? So I guess the flip side of that is, you have tomorrow, you need to see like an open lower and then continuing to break to kind of cement like, bouncing off of this again. But yeah, I mean, I'd watch out here. I mean, like I said, that megaphone's starting to take shape. If you had a higher session tomorrow, closed above this downward trend, it could get a little bit of explosive to the upside. And, this is a weekly, right? Last week's candle rejected one or closed above 1, 2, really, this is 1, 2, 3, 4, 5 weeks worth of trade last week. I mean, that's, and then you had an attempt to get below a pretty big moving average and then clearly rejected it. So the longer term stuff is hanging in here pretty well. I think tomorrow's close, like the way or I should say open, and the way it closes tomorrow is going to be pretty important. We'll see.
Well, I mean, I think biggest takeaway from this tech talk is long-term charts are something to definitely keep an open eye on.
Better get your lumber bought, Nighthawk.
Buy your lumber, Nighthawk. Get your S&P.
Yes.
Rolling.
Go read that book, by the way. Reminiscence of a Stock Operator. It's a good one.
I'm going to go to the local library and pick that one up tomorrow.
Your local library. Go to your local library.
But until I get to the library, we appreciate you guys tuning in every single week, watching Andy and I talk about these charts. But until next time, Andy and I will be back next week. The following week, we will be off as we have Thanksgiving, Turkey Day.
Thanksgiving next week? Man.
No, not next week.
The week after? The week after. All right.
So, but we'll still be back next week. Your favorite tech talk analysis, guys.
Wait a minute. How are you going to host anybody when you have like 3 plates, a bowl, and like 2 forks?
Well, that's why we're not. We're not doing it in 2 weeks. Just next week. Got
it. We're not doing the show because you only have like 3 bowls.
Exactly.
1 plate.
Exactly. It's a full house.
Got it.
Awesome, everybody. We'll see you guys next week. Thanks for tuning in.
Bye.